Oh, fuck.
Hello, this is Dave, and welcome to Equities Story. This is just general share advice, not personal advice. And we're going to do the video. This time we can actually see the screen because we've just done a really, really good video. Lots of interesting. Actually, I don't think it was that good, to be honest with you, Wolf. But anyway, we gave lots of interesting ideas, and we're going to go through them quickly because me and Wolf hate redoing stuff. But it's only general share advice, not personal advice. And
can I just quickly tell everyone, please do not work with animals or old people. This is what happens.
Oh, anyway, I can actually go through this a lot quicker because you do waffle on. So I know what you're going to say now. I'm just going to start off with obviously the Nasdaq having a good little move up, excellent move up on Friday night. So these sort of stories, these sort of little tech stocks that are recovering, the ALCs, still like them. AIMS, you still like them. That's why we went for one of your tier one tech stocks, FCL.
Tier two,
Tier two,
too far up there.
Sorry, tier two, nearly tier one, FCL. And if you look at it, Wolf, come on, it's got to get retest that 250 at least, yeah.
We made a very strong case for it on Friday, Dave. That I went through trying to identify really the stocks that can still got a long runway upside, and this was the standout. So let's hope.
Let's hope. Wolf, we had a look at we're having a look at a few stocks on Einstein's because there weren't too many announcements out today. SGLLV, Sunrise, obviously in the right sector at the moment. Mm-hmm. And you very beautifully said in the last video that there's people believing that food is undervalued here in Australia, right?
Yeah, there's investors out there. There's one activist on AFR talking about the food sector in Australia is hopelessly, grossly undervalued. That's the headline, right? So he thinks there's going to be an M&A activity around. If you think to yourself, which are the better stories, like your GNCs, the Ridleys, the United Malts? But I think Elvis is the one that really, for me, is a standout. They've been coming up with some really good results recently, and they haven't really put a foot wrong yet. They've been sold down, and maybe on that back of the foot and mouth disease scare, which for me, like I said, it's a scare at this stage. It's not here yet. So imagine if it doesn't get here, Dave, then maybe this is a great opportunity to buy.
So you'd be happy, like, buying this off a monthly chart for long-term investors, someone with a 3 or 4 year view.
Yeah, look, first nibble maybe around these levels, right? You've got a nice stop maybe in the blue line, 10.45. So for me, long-term investors, like the 5-year plus investors, trading on 10 times yield of 5%, that really, I think he's right. I think there's definitely value in this food space. And when you look at the whole global situation, food is always going to be scarce. Doesn't matter what, with the climate change and anything.
Well, the yield's appealing at 5%, isn't it? And Wolf, especially, where they had a look at those retail numbers in Australia, they weren't that good. And the possible feeling is, well, we know interest rates are going up, but maybe not quite to 4.5%. Maybe it's 3%. Mm-hmm. So the market's starting to factor that in. So possibly we're starting to see signs that we're slowing down. So what the RBA are trying to do by lifting interest rates is starting to work, mm-hmm. which is, I suppose it's like for you, like you're saying, it's a double-edged sword, isn't it? I mean, yes. The slowdown's happening and things are going to get tougher, but obviously, if we can avoid interest rates going
absolutely
too high.
Yeah, it's good. It's good in a way where, like you said in the first video, and beautifully said it, by the way, is that the number one priority is tame the inflation, right? That's what the RBA is trying to do right now. So that's why they're pushing their interest rate up. And with the pushing the rates up significantly quickly, it certainly helps. First of all, unfortunately, it pushes us probably to recession type stuff, but it will temper the demands, which means less pain maybe later down the track.
And what's your bet tomorrow, Wolf? 0.5% or 0.75?
Yeah, I think tomorrow we've got the RBA, 0.5 for me. Look, I'm a boring down the middle guy, so 0.5 for me. We'll see what's the market does.
Well, I'm going to go for 0.75% because I'm an exciting, upbeat type of guy, very different to you, and I'm not boring. So I think we'll have a little beer on this one, Wolf. You owe me so many beers at the moment, so I can afford to lose one.
I think keeping the bets.
All right, Wolf.
I'm up.
You think you are, you're not. So
Yes.
hang on. So Wolfie, AZJ.
Yes.
This is another fairly good dividend paying stock, okay?
Mhm.
And that I'm just looking at thinking there's your weekly. Your
Mhm.
weekly starting to bounce a little bit. I don't mind this. Why is this company looking so good? I mean, any ideas?
Got of coal. That's simple. I mean, they transport. I think their main gain for them, transport coal. And you see what coal's doing, $400, $500 a ton at the moment. The coal companies are flying. They're probably pumping that coal out and sending it out overseas. You look at the actual company itself also, and it's an infrastructure play in a way, so it should be fairly resilient and safe. And when you add the 12 PE and an 8% yield, it's attractive.
I'm liking this, Wolf. You know what? What a fun video we've done today, because I think there's two interesting dividend plays, really.
Yeah.
This AZJ, good chart, and that Elders.
Yeah, that's coming to play, isn't it? It's beautiful.
No, it is good. Okay, you had CXO, which is one of your favored lithium plays. They're not producing yet, but good looking chart, Wolf. And I'll still, if you're not in it, I'll still buy it. Good to see these little communication companies, TPG and TUA, looking okay. PWH, well, we talked about this one for too long actually in the last video, but your just general feeling is, buy stuff which isn't overvalued, right? That's so it doesn't look bad. I think if you're in this, Wolf, you're holding it, right? You're definitely going to hold it, because at the end of the day, it's not swinging, is it? Really, it's not like, it's got above the water level, so you're swimming, but you haven't started doing front crawl yet.
Oh,
So
right.
I get it. So I'll tell you what I do like. I know Worley, which again, it's expensive, but I do think it can trade a little bit higher. You've got BOE, which is one of your preferred uranium stocks, and again, Wolf, nice looking chart. So
if you're stocks doing well,
they are doing well. They are doing well.
I'm a genius.
Os4X.
Okay.
Again, which had that lovely little buy signal, didn't it? Recently, bullish signal, buy signal starting to go through. We did say, someone asked us on this live the other day, I think somewhere near $3, take a profit time. COG, absolutely superb price action. Had the buy signal, went through, bullish signal, bang, and it's gone again. And but maybe a bit of resistance at 2. I mean, it's had a run. I'd definitely be taking profits on this, unless you're in it for. Does it pay a decent div?
24%. Sorry, 24%. 24 times PE and a 7.5% yield. So not bad, but I don't understand why it's such a high PE and such a high dividend at the same time. Usually it's you've got the high dividend yield.
Well, if you're trending it, you're taking a profit, Mr. Wolf.
Yeah.
Another story, RDY. So you've got a tier 1 bouncing up. This was trading as high as 420, a bit of recovery. I do like the look of it on that weekly, Wolf, and for me, that's a nice little buy. And I think the daily looks fairly good. So maybe a nice little target. Maybe you could target 350 on it. Doesn't look too bad at all. AKE, one of the sort of creme de la creme, really lithium plays that's actually making money and producing. Again, great to see some of these lithium plays come back, and that had a beautiful looking chart and starting to go on with it this week. I quite like LIC. Again, if you are going to buy this, like you said, it's expensive, just a tight stop.
Can I just slightly say, it's actually not that expensive. The problem is the real estate space, right? That's what bothers me. It's trading on 16, 17 times, which is not bad, right?
No, it's not bad. It's not bad.
Just, I think the real estate is scaring me. Market, so that's why I probably wouldn't want to be touching it.
Yeah, okay, but it could, with the talk that interest. Well, the talk that interest rates maybe are not going to go up as much.
This is a buy if that's the case, right?
Yeah. Well. Anyway, listen. If you're going to buy a tight stop, and I'm going to give you a tight stop. You've got LIC there, 1673. I think Wolf, below 16, you're out, right?
Fair enough.
So tight stop on it. A bit of noise came out today. ABB. A good announcement. The market didn't like it, did it? So maybe something we missed.
Not good enough. I think the problem is, if you're expensive, PE 50 something times, if you don't deliver something really, really good, this is what happens in this market. So just be wary of buying the the expensive stories. You got to get onto it. That's why, you've got much more give for you if you buy something like 10 times PE versus something like 50 times PE, because if you make a misstep, down you go significantly.
Well, for KPG, not your cup of vodka. What is it really? But I mean, good looking chart that's gone on with it. Does, and obviously a fairly decent announcement today. And gold starting to make a little bit of comeback. Gold starting to look a little bit better on the charts, Wolf. Yeah. AUC, can you tell us what you like about Oz Gold?
Okay, so we looked at two previous small little gold players, and we thought, let's identify some of these small things, and see if there's any merit in them if gold starts going up. So we looked at Mika, and we looked at what was the other one? Oh God, I said it before and I forgot now, but it doesn't matter. We've got this one now. So the reason why I like it, and I'll go through it again, and that is you've got a gold reserve of about 1.2 million ounces, 1.28, which is, anything over 1 is good, means usually 10-year mining life with 100,000 ounces, which is the standard type when you start looking seriously at a company in this space. So if you look at the key operating findings, right, and the key financial forecast, this is what that makes interesting really. So it's a lowish grade, 1.25, right, which is not incredible, but not bad. We're looking at 100% owned in Australia, which is excellent. You've got let me have a look, NPV, which is, the thing is they're very cheeky. They're using a 5% discount rate, which is really low, right? It's around 64 million. So I'd say if I take it up to say 10 times, you're probably looking at about 100 and something million. I'd say 100 and maybe 200 million. So it's not bad, right? You look at all sustaining costs, which is the really key for me for everything, 1370, right? That's another positive. Now, the only other thing I need to have a look at, so don't jump into this story yet. I just need to find what actual they used gold price. So let me have a look if I can see it on here, because that will give us the idea. And here we go. See, very cheeky, 2,300 per ounce, right? Which is up there, very up there. And you think to yourself, you haven't given yourself much room to breathe, have you? But it's
you've given a lovely little talk about it, and the answer is no.
Look,
because you didn't. Yeah, okay, forget that. Everything Wolf said the last 2 minutes, just forget what he said.
It's not bad, but it's just a little bit too cheeky for me.
All right. So Wolf, just to recap, Elders dividend looking good, AZJ looking pretty good. We still obviously like these ideas, these recovering tech stocks, the FCLs, the ALKs, looking pretty good. DTC is actually up 9%, still going on with it. Whisper's actually fighting back, Wolf. I mean, good. It's still struggling, but I'll tell you what, if this can jump over 126, you'd have a look. I don't think I'd be trading it at the moment. So Wolf, at the end of the day, we're just trying to scalp what we can out of this market. We're still wary. We're seeing this lovely little bounce. You can see this on the Nasdaq coming back up to trend. You're seeing it again on the Dow, looking very, very good, coming back to trend. The question is what worries us. We're going to go back, and we're going to go back again to I think we're getting this little move now. We're coming down. It's the start of a bigger fall. I hope I'm wrong. Wolf. Obviously, nobody wants to see markets go down too strong, too hard, but I still think this little bounce is nothing more than what they call it, a dead cat bounce.
Yeah, but look, as long as we can make some money
from dead cats.
That's right. That's good.
All right. Thanks, Wolfie. Have a wonderful day, champion.
Thanks, guys. And a Google test for everyone on AUC, see if you're listening or not. It started good and it finished up pretty bad.
Yeah, don't buy. Thanks, Wolfie. See you, mate. Bye.
Bye.